Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now.
Next generation solid state battery startup QuantumScape just reported its third quarter results a few days ago. If you're watching this video, you probably want to know, are they making progress towards becoming the big battery breakthrough that we're looking for? Or is this a company that you might need to avoid right now? This is The Smattering. I'm Jason Hall. Jeff Santoro is joining me, and we're going to be taking a look and talking about the important things to understand about QuantumScape's quarterly results. Jeff, how's it going?
It's good. I'm glad we're doing this. We have a video we did earlier about QuantumScape, so I'm happy to follow up on it.
Yeah, so I'm going to kick it off here, and we'll talk briefly about what QuantumScape is, because this is the key behind understanding the cadence of what it's reporting to the market right now, and what you really need to focus on as an investor. So QuantumScape, again, is a startup company that is developing solid state battery technology. The idea is solid state batteries, we know in a lab that they're great, that they're lighter, they're much lighter than lithium batteries, lithium ion batteries. They, per pound of weight, per unit of weight, they hold a larger charge. They're safer, right? They're not as likely for things like catching on fire, and they can take a charge much, much faster. These are things that are really, really important for transportation. You can make a lighter vehicle. It can take a longer charge. You can charge it faster. Jeff, what we don't know yet, again, this is a developmental stage company. We don't know if the company can build them at a cost, per watt, and at high enough scale to be competitive with the existing technologies, right?
Right, because the thing to remember with QuantumScape is that they're working to make their product better, but over that same time frame, the current battery technology that we do see in electric vehicles is also improving. That's becoming more efficient. You're getting faster charges and longer cruising limits out of those. So that's really going to be the challenge: is can they get good enough, fast enough to be a viable option to just improving battery technology that we already have out in production?
Exactly. And what do we know? We know that QuantumScape has made progress. They did give us a little bit more information about that in the queue with some of their cells that are in development. They're starting to do testing with some of their automotive partners. That's a real positive. They're starting to kind of stand up some manufacturing lines at small scale to start demonstrating cost and their ability to manufacture. So we're starting to learn a few things like that. But Jeff, here's what I want to do. I really want to focus on what we can learn every time the company reports that we really should focus on. You ready for that?
Yeah, let's do it.
It's real simple, guys. This is a company that is essentially pre-revenue. You got to focus on the balance sheet, okay? The company's not really reporting any revenue right now. They have some deals in place. We might start seeing some revenue come in, but you just want to go straight to the balance sheet here. And what do we see? We're going to focus on cash burn. What are we looking at right here? Current assets. This is essentially cash, marketable securities, which are things like short-term treasuries that are basically they're basically cash equivalents, things that it can turn into money really, really quickly. And then you want to look at current liabilities. Again, these are expenses that are due in the next year. So stuff like accounts payable, payroll, pension benefits, lease payments, all of those sort of things. And you take that short-term, that current assets right here, and you subtract current liabilities. And what's left over is called working capital, which is basically the money the company has to run its operations today. All right. So on the left, this is what it just reported. On the right, this is what it reported in the same quarter a year ago. What do we know? We know that its current assets fell about $300 million. Okay. We look at its current liabilities. It went up about $15 million, which is a small amount. What's the lesson? The lesson is that this is a cash burning business, but it still has essentially $1.1 billion in liquidity on its balance sheet right now that it's going to be able to spend to cover its operations. So Jeff, here's my take. That is not enough to cover the cost that it's going to take for CapEx to build out its manufacturing. But that's plenty of money to cover its operating expenses, cover R&D, to cover what it's going to continue to spend to move towards commercialization. Because here's what's going to happen. As soon as they demonstrate a product that works in the real world, at a cost that automotive manufacturers are willing to buy, like VW, right? It's one of their big partners. As soon as they demonstrate that, they're not going to have any trouble raising the capital to build their manufacturing. So in short, if you're interested in this company and you're waiting for their quarterly results, you really only need to look at it to look at their balance sheet to find out how they're managing their spend, their cash burn, and they're going to tell us everything else that we want to know in between the quarter. As soon as they get good news, I promise you there will be a press release about it.